Hello guys, Steven Dexter. Welcome to this YouTube videos. Today we're going to talk about some of the tickers that happened for the last 2 weeks. ASAG and SNDL really stood out, and I'm going to talk about some of their charting behaviors and some of the factors you should pay attention to, especially during the midday. So before I start this video, make sure to click the like button and subscribe. I would really appreciate that. And let's get into the video. So let's start with on this ticker. I think I lost about 50,000, and let's start from the beginning. So this ticker went from 1 to 5. I think it was without any news was pumping the ticker. It was just pure volume and hype drive the stock from 3 to 5. You can see that the stock was really struggling around the $5, $5.50 area. So I decided took a position around close to 5, risking the 560. I wasn't very aware of my risk of how much I'm going to lost after I cover around the 570. So I sized in a little bit too much around the consolidation area because it failed it twice. Tried to test the high of the day. So 550 right here, failed it to test it out right about here around 10:45, then failed to test it out around 11:56. But you can kind of see that each time when the stock tried to break it down of its own support, it held consistently for almost 10 times. So we have one right here, 1, 2, 3, 4, and 5. So once it gets into the midday, the stock's still holding about 90% of its own gain. So I didn't really take my profit. I waited. The stock decided to come back and did the midday perk pattern. Once it breaks the 560 area, and it basically went from 5 to 20. So normally for this type of behavior, it doesn't really happen that often, because for a flow that is around 30 million, the normal squeezing percentage for this type of flow is around 50% to 60%. So I wasn't really aware of, okay, so if ASAG decided to do a fake out and how far it will pull, because 90% of the time you will never hold its afternoon spike. So for this scenario, I cut my losses around $6 area, so I took about 20 something percent losses. Overall, it wasn't a very good trade, and also I didn't really stick to my rule because the volume was way too much, and also there were little resistance around 4, so that wasn't that much compared to the intraday volume. And the last one, I sized in way too much. So make sure in the future wise, if the volume is really overwhelming compared to the historical resistance, you have to treat it like a fresh chart. There was nothing in the historical chart. There's only one intraday chart for you to analyze. So the second ticker I want to talk about is SNDL. This is very similar to BNGO, which I took a loss, I think it was early this year in January. Let's see what's the difference between BNGO and SNDL. So after I took a loss on BNGO, I found out pretty much all of the multi-day runners doesn't really drop 75% after the initial first red day. So you can see that SNDL only dropped roughly around 50%. Let's say start spiking around 50 cents to 4, then dropped it to 2. So that's about 50% from the high. Now let's look at BNGO. You can see after the initial run up, stock went from $1 to 7, so it dropped it to 3.7 at one point. So for both of the tickers, I did learn something that I should cover earlier if I decided to short into multi-day runners. So for SNDL, my initial heavy size is around 3.4, covered around 50% at 212-ish, added again at 290, 280. Then the final cover will be 1.8 and 1.9-ish. So for the entire trade, I made over around 180,000. For AACG, lost about 50,000. I think both of the tickers are completely different patterns. ASAG, it was a pure gap up short without resistance. SNDL, much safer, bigger flow, and it's trading massive amount of volume. But if it's really overextended and it's about to go red, when the stock, especially going into the backside with really heavy volume, 90% of the time you will drop a little bit more into the next day. That's why I chose to cover SNDL at the next day at open. So that will be all for today's recap. Make sure to stay safe trading in the current market because you have to stay really disciplined to respect your risk, avoid getting squeezed from 5 to 20. I heard people that didn't really cut losses on AACG. And also make sure to capitalize on these very heavy volume multi-day runners. I think it will be a really good shorting opportunities once they decides to go red and potentially fade into the next day. So that'll be all. Thank you very much for watching. I will see you guys in the next one.